The day is March 7th, 2025, coming at you from Chilton Studio at the University of North Texas. We have plenty to talk about. Let's get into it. Business as usual. Good afternoon. I'm Evanson Franklove. This morning, Walgreens were recently acquired by private equity firm Sycamore for almost $10 billion. Walgreens recently agreed to terms with Sycamore Investments to sell each of their stocks at $11.45. This comes as the pharmaceutical giant has been losing money over the years. The buyout can make the company have more flexibility to try and improve the business without any worry to stockholders and Wall Street itself. The company has also been in the early stages of closing about 1,200 of its roughly 8,500 stores, as well as taking steps into persevering their own cash. Walgreens is suspending a quarterly dividend that they've offered for over 90 years. The buyout comes after competitor Rite Aid emerged as a private company after a Chapter 11 bankruptcy reorganization. The buyout does intend to change Walgreens into a privately owned company. Honda is set to move production of their next-generation Civic hybrids from Guanajuato, Mexico, to the state of Indiana. This comes after the recent tariff increases against Mexico, Canada, and China went into effect this Tuesday. Before this, Honda had planned to manufacture the next generation of hybrid cars in Mexico, but production was slated. Chief Operations Officer Shinji Aoyama commented on these tariff changes, seemingly worried about their production having to be moved into the States. Last year, Honda had sold a whopping 1.4 million cars and trucks in the U.S. and around 240,000 hybrid vehicles, as well as making the Honda Civic being the second best-selling car in the U.S. Right behind the CR-V, Honda is now set to start production in Indiana in May of 2028, with an expected annual production of 210,000 cars. Moving on to the stock market, it was another interesting week. Stocks fell until today, where we saw a bit of a comeback after noon. The Fed Chairman Jerome Powell gave a speech asking for patience with the Trump administration's imposing of tariffs. This caused some optimism and hope in the market, with around a 0.5% rise in the Dow, the S&P 500, and NASDAQ following the speech. Regardless of the bounce back, the market still suffered its worst week since September, overall falling 3.1%. Energy and utility stocks outperformed the rest of the S&P 500 today. Energy rose more than 2% with rising oil prices as Trump threatens new sanctions on Russia to pressure them into a ceasefire with Ukraine. American crude oil closed with a 1% raise after hitting a multi-year intraday lows earlier this week. Utilities are up 2%, which is a sector considered a hedge against geopolitical risk. For a better perspective, let's toss it over to Seth Wickman, who has an expert with him in the studio.
Thank you, Evanson. I am joined here today by Dr. Mark Evers, who has a PhD in financial planning. So thank you for joining me here today. How are you doing?
I'm great. It's great to be here. Thanks for inviting me.
Of course. So as Evanson was talking about, it was another kind of weird, rough week in the market. Besides today, we saw a little bit of a rebound. There's a lot of, reasons that are kind of going around in the community as to why. And one of those things is these tariffs that Trump is talking about imposing. Why is this kind of affecting the market?
Well, as you know, one of the things about the stock market is that it's forward thinking. So what we're doing, anytime we buy a stock, we're buying ownership in a company. And so it doesn't matter what the company is, we're buying a piece of ownership. So the hope is that whatever profits they're going to make in the future, that we share in those profits. And the only way we share in those is if the stock price goes up because the company is growing, or they pay out dividends. So the problem with tariffs is that it creates uncertainty in these businesses. And so with that uncertainty, it can also lead to increased costs for manufacturing goods and services and producing services. And that can hurt sales for the company because they have to make a choice. Either they pass the prices on to the consumer and things become more expensive, or they have to absorb some of those costs, or it's probably going to be a combination of the two, because companies can't just raise prices. Right. Ford can't just say, hey, we're going to charge 25% more for our pickup trucks now. They can't just get away with that, because there's other manufacturers out there who will keep their prices the same, and now suddenly Ford's pickups will be more expensive than Chevrolet or GM or like Nissan or something like that. So Ford just can't raise prices, right, because of competition. So they're going to have to absorb some of the costs there, and that can cause their future profits to be hurt. And so if you're buying stock for a share of those future profits, suddenly that prospect becomes less valuable to you. You're less likely to be motivated to purchase that stock. So on the demand side for stock, that's being hurt by this uncertainty of tariffs and how it's going to impact different businesses that are out there. And so that's causing us to see some softness here in the first couple of months of the Trump administration, particularly in the last 3 or 4 weeks, when this talk of tariffs has kind of ramped up. So
right. And another reason that people have speculated to see this decline is because this time of year, a lot of companies are announcing their earnings. So how could this kind of affect the market and individual stocks?
Well, definitely. It's the earnings play a role in the stock price today for sure, because the earnings give us a clue on how well the company did relative to what the projections were in the past, right? Mm-hmm. So if a company did well and they beat their earnings projections, then the hope would be that that company would continue to outperform in the future. So that might make that company more valuable. And we saw that last night with some different announcements. In fact, we were talking about this earlier. Broadcom released an earnings announcement last night after the market closed, and they did well. They beat earnings projections, and they gave good guidance going forward. And that caused that stock to rally today. It was up over 8% today. Mm-hmm. But it's not just the earnings like Broadcom coming out with, it's also the projections. It's the language they're using, like what do they say going forward in that business? If on the other side, though, a company could disappoint and come in with lower than expected earnings. Right. And so that causes investors to question that company going forward, and that ends up hurting that stock price because people are less likely to buy it and they want to sell it and get out of it. So that's earnings season is a big deal. So we got tariff talks. We're in the middle of earnings season. And then the other thing that just happened, very important, is the direction that the Federal Reserve's going. Right. So the Fed had been in a mood to cut interest rates some. So really in the last 2 to 3 years, the Federal Reserve had been increasing interest rates. And what that does is it makes borrowing, particularly in the short term, like on your savings accounts and your money market fund, the borrowing costs for people to borrow money on the short term became more expensive because the Fed's trying to control inflation, right? The Fed has 2 mandates: to control inflation is number 1, and then 2 is to help keep unemployment low. So inflation low and unemployment low. And so right now we had high inflation, right? And so the Fed was trying to pump the brakes on inflation, so they kept raising interest rates. And they finally got to a point where the short-term rates were somewhere around between 5.5% and 6%. And towards the end of last year, 2024, they said, hey, they stopped raising rates. They let that kind of work its way into the economy. We started to see inflation ease. So inflation was running over 8% at one point, and now we're closer to the 2 to 2.5% range, which is really where the Fed wants it, around 2%. And so we're closing in on that. And that gave the Fed kind of cover then to start easing interest rates back down. And so before the end of last year, we saw a couple of rate cuts. And so now we're back around like about 4.5% to 5% is the rate right now. So the expectation had been that the Fed would continue to lower rates. And when we look at the dot plot chart, which is all the Federal Reserve Board of Governors telling us, hey, where do we expect interest rates to be next year and the year after and 3 years down the road, they kept pointing back down to around 3% on that interest rate. Mm-hmm. But today, because of this whole tariff talk, the Fed has decided to pause those rate cuts because they don't know how that's going to affect the economy. Mm-hmm. They're going to say, hey, we're taking a wait and see approach. We're going to pause cutting rates for now. We want to see how tariffs impact us, because if tariffs create inflation, then the Fed's response is probably going to be maybe even to raise rates again. And so what does that matter? Well, the stock market wants easy money. They want lower interest rates. Right. And that generally helps the market go higher. So and so today we saw a little bit of a rebound because I think a couple of things. One, we saw some good earnings from some companies like Broadcom.
Yeah.
And the other thing is that Jerome Powell, the Fed chairman, talked about what we're going to do with interest rates. So it created certainty.
A little bit
where
of
there
hope.
was, the market hates uncertainty, which is what the tariff talks has been creating. And it likes certainty. So by the Fed giving us better guidance on what interest rates are going to do for the next year, that creates a little bit of certainty in investors' minds. So it makes us more optimistic and more likely to purchase stocks.
That's some very insightful stuff. Again, thank you for joining us. And I wanted to close out and ask you about an event that your department is putting on, the Invest Fest. I know that's coming up. So talk about kind of what this event is. And
So on April 7th, we're having Invest Fest sponsored by Fidelity Investments right here on campus. We're going to be in the Union. We have a great lineup of speakers, and we have a student panel as well. That's a combination of students from the Money Club and the Student Investment Group in the Ryan College of Business. Those students are going to help you figure out how to go from being a student to being an investor. I'm going to share some tips with you. We also have some great professionals lined up from Fidelity and from some other companies. After that speaking happens, we're going to provide lunch in the Jade Ballroom in the Union. So come and join us for lunch. Sign up for that. You can just Google Invest Fest 2025 and Ryan College of Business. You should be able to find that. And then sign up if you want to join us for lunch. And then afterwards, we're going to have a career fair in the Ryan College of Business so you can meet potential employers, network with different companies that are out there, and ask questions about investing.
Perfect. Thank you so much for joining me here today.
Yeah, Seth, thanks for having me.
Of course, yeah. And now, Evanson, back to you at the desk.
Thanks, Seth. As we all know, Denton is our beloved community. Unfortunately, Sally Beauty is leaving Denton after 40 years. The National Beauty Supplies headquarters are following the trend of moving to Plano, Texas. Other companies such as JP Morgan Chase, Cinemark, FedEx, Frito-Lay, Raytheon, and more have had major presences in Plano for years. Sally Beauty will finish out the year and their lease in Denton before moving the team of over 600 to the Legacy West Shopping Center in Plano. The move comes with the company downsize in the face of stagnating sales. CEO Dennis Polonis says she's thankful for support from the city and the county of Denton, but believes the move will drive enhanced collaboration and innovation. One new addition to the city of Denton has just been approved by the city council. The Denton Affordable Housing Corporation is working with the Denton community, MHMR, and an Austin-based developer to create an affordable multifamily housing project named McAdams Haven. The proposed location is at the corner of Lindsay and Bernard, just off Interstate Highway 35. McAdams Haven is one of 3 projects to receive support from the City Council. The other 2 are Roselawn Village and Palladium Fall Meadow, both of which are looking for additional housing tax credits from the city. The president of Denton Affordable Housing Corp., George Ferry, said that the project isn't only focused on housing, but that it's about supporting human dignity. Denton has another project in the works with the Fine Arts Theater. Originally opened in 1877, the theater operated as an opera house until being converted to a movie theater in the 30s. After a fire in 1981, the building was used on and off as a community meeting space until completely shuttered in 2014. The Access Reality Group, who worked on Free Play and other projects around Denton, are on the team to reopen the theater. The renovations involve completely gutting the building to building 3 screening rooms which can be used for new releases, old movie parties, and community events. The plans also include a rooftop bar overlooking the square. Jason Reimer, creative director with the project, said it will be a Denton theater for the community of Denton, run by the people that live there. With the help of a $1.6 million grant from the city, the Fine Arts Theater will be open and running as soon as April of next year. For more local business news, our reporter Chloe Boyder met with the owner of Grumpy's Comics.
I'm Chloe Boyder here with Business as Usual, and today we are going to interview the owner of Grumpy's Comics.
Around looking for work. I finally found work with Boeing when they were down here in Corinth, and then laid off by them in early 2004. And by that time we'd acquired the store, and it was just back to it got to be more work looking for a job than it was to just run the store. My retirement check pays almost all my personal bills, and we keep this stuff up and running pretty well. How do you make $1 million in comic books? Start with $2 million. A lot of people deal with that. This is my third store. I was deeper in debt when I closed both the previous stores than when I opened them. About the same time in my personal life, and even here, I went to the policy of I pay cash for wants, I finance needs. And it's recognizing what is a want and what's a need. That's the hard part, and you need to deal with it. You got to pretty much figure that your gross sales, they need to be about 35 to 40% above cost to be able to take care of all your people, all your rent, all your electric, and everything else that you have to deal with on a daily basis. So it's a matter of figuring that out and starting small and growing. Try and find a place that you can deal with. I said when we bought the place, we were 960 square feet. We moved over here to 1,400. Then when we went to Albertsons, it was almost 2,400. When I went back to UMB Bank, I had to downsize down to 1,000. My customer base had shrunk while I was down there because I want to do that. They want to deal with it. State of Texas makes it real easy to open a new business, but that's why you see most of them close after 2 or 3 years once their lease is up and they realize that it's more work than it is. It's a real job. And I always tell people my 10 job is managing somebody else's store. My 9 jobs owning and operating my own, because if you own and operate it, it's a 60, 70 hour a week job. You're always thinking about it. Even when you're not here, you're thinking about it. What can I do? What can I do differently? What can I change and add? Ask anybody that owns their own business. They're never off the clock, because I don't take any salary out. Between my retired military and my Social Security, if I took money from this, I'd give up Social Security benefits, and I'm not going to do that. I'm still doing this at 70 because I like the community, not because I need to.
All right, well, thank you so much for talking to me.
Glad to, Chloe. Nice to meet you.
Thank you, Chloe. And that wraps it up for today. Thanks for joining us. We will be back with more business news on March 21st. Until then, it's business as usual.